And now, The Money Show with Motheo Khoaripe
on 702. Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025. Good evening and welcome to the Friday edition of The Money Show. My name is Motheo Khoaripe. It's been a stop-start week with all the holidays, but I think let's finish strong on this Friday. We'll be tackling the biggest story, at least locally, for the businesses and the economy. The Finance Minister Enoch Godongwana granting a 2 billion rand guarantee to Ithala depositors, saying really they're protecting those that has their money banked with Ithala. But we'll find out what this means for the KwaZulu-Natal provincial office, of course, who has to disperse these funds. Khaya Sithole, independent political analyst, joining us for that conversation. Then Bitcoin approaching $100,000 again after a great fall during the higher tariff announcement, breaking through a 10-week high this time around. We'll be talking to Karel Diaga, the research lead for blockchain technology at the CSIR. Then a little after 6, the Money Show explainer, of course, any complex story that's got to do with the economy, business, and anything money, we do tend to explain on the Friday. This time tackling the story around the Reserve Bank having egg on its face. The Gauteng High Court basically ordering it to disperse the funds belonging to IBEX Holding. Of course, the Reserve Bank had been holding back 9 billion rand from the former Steinhoff company. Rob Rose, editor of Currency and author of Steinheist, joining us for that conversation. Then Patrick Matidi, head of equities at Aluwani Capital, tackling the international and local market commentary today. And we'll be looking at those numbers quite closely. Now, Friday, far later, after 6:30, we're going to be talking about a little bit of innovation in the fashion industry, speaking to the co-founder of Faro, Penney, about how the South African startup is using AI to tackle fashion industry's waste problem by giving last season's stock a new lease on life. Finding that more about that later on the show. We'll also, of course, quiz you on all the information we've shared on The Money Show. But for now, let's talk money.
The Money Show
with Motheo Khoaripe
on 702. Let's walk the talk.
Big story coming out on this Friday. Treasury has been really busy this week. This time around, Finance Minister Enoch Godongwana approving a 2 billion rand guarantee to protect the funds of Ithala Bank's more than 200,000 retail clients. The guarantee will facilitate payments to their depositors using one or more banking institutions in the country to ensure the accounts are migrated timelessly and that the depositors receive their funds. Now, in January, the Prudential Authority, which is housed within the South African Reserve Bank, applied for the provisional liquidation of Ithala Bank, saying it was technically and legally insolvent. Ithala holding, of course, around 2.5 billion rand in deposits. Now, the finance institution has historically operated under a temporary license provided by the South African Reserve Bank, which allowed it to function as a banking institution without being formally registered as a commercial bank. Let's chat now to Khaya Sithole, independent local political analyst, around this particular story. There's been a court case between the two parties, and it's still a big issue for those that have decided to use Ithala in KZN, especially those that are in the rural areas. Khaya Sithole, welcome to The Money Show.
Good evening, and good evening to the listeners.
Another announcement from Treasury that's got to do with Ithala Bank, this time saying they will provide the guarantee. This will definitely mean that the KZN provincial office will then have to disperse the funds. Just how tough will it be for that province to have 2 billion rand ready for the Ithala depositors?
Well, it's a complicated story, and what makes the story particularly complicated is not just the ongoing litigation, but the fact that so much has happened in the past 3 years, it becomes difficult to figure out what the essence of the story is. So the simple part of the story is that throughout all of these back and forth exchanges between the Prudential Authority and Ithala Bank, Ithala has actually maintained an active customer base, and that over 200,000 depositors that you referred to. Now, when they've maintained that active customer base, they hold deposits on behalf of those clients. And obviously, if they held those deposits, those clients would like to transact in and out of their accounts as they wish. But that hasn't been the case since at least the beginning of the year. And since they have not been able to transact, it's been a matter of, well, how do we enable them to be able to access their funds? And the answer was always going to be that there has to be a third party that was going to be appointed in order to facilitate that. And it's usually going to be one of the big banks or one of the other remaining banks that's going to do so. So that process, the process of today seems to be speaking to that question of those depositors whose money has been stuck in the system need to be able to access it. They won't be able to use Ithala infrastructure, so some other bank is going to be appointed to do that, which was the same issue we saw in VBS when Nedbank stepped up in order to facilitate access to the fund. So that's really what today's conversation is all about.
And it becomes difficult because Ithala has also accused the Prudential Authority of engineering its collapse. They were saying they were fine all along. All they needed was a bailout from Treasury, but instead of that coming, it was the liquidation that was placed on it.
Well, you cannot have a conversation that says we are fine, but you need a bailout. There's simply no such thing. So the problem here is that, firstly, Ithala should have had better arrangements with its own shareholder, which is the KZN provincial government. And what those arrangements should have focused on was the question of, well, if Ithala is going to apply for its own banking license, then it needs to have a new shareholder model, which is what we saw the Post Bank doing. Ithala and the KZN provincial government simply failed to do that. So what then happened is that the Reserve Bank then says, well, actually, we are no longer going to renew an exemption, and an exemption is not an entitlement. It's the key is in the word. It's an exemption. So when the Reserve Bank said, look, the exemption is not going to get renewed, the process that should have been initiated was a process of either deciding whether Ithala was going to apply for a full-service banking license or even a mutual banking license. That did not happen. So that's really how we've ended up with this particular crisis, where obviously at some point in time, the Reserve Bank says, well, not only do we have a question of the licensing issue, but we also have concerns about the stability and the integrity of the bank itself. And that's when they appointed a repayment administrator. It is the repayment administrator who says that according to his eyes, or at least according to his own analysis, the bank is no longer viable on a standalone basis, which has now triggered the liquidation process. So again, far too many moving parts in relation to this, but what has been really a bit unfortunate is that depositors who had faith in Ithala Bank have not been able to access their funds, and obviously this guarantee of today will now be able to enable them to be able to access those funds. That was
Khaya Sithole, independent political analyst, covering that story around the Finance Minister Enoch Godongwana granting 2 billion rand guarantee to Ithala depositors. There are more than 200,000 of them, and it's them that suffer that are in the rural areas, because Ithala provided a banking option and also a funding option for some of those projects and farmers out in KwaZulu-Natal. But we'll see how this story carries on.
The Money Show with Motheo Khoaripe
on 702.
702.
Welcome back to The Money Show, tackling Bitcoin. Now, recently, President Donald Trump's higher tariffs didn't only affect the traditional markets, but also hitting the digital markets, if you will, through Bitcoin. They lost a bit of value then, but now resurging. Bitcoin breaking above the $100,000 mark on the 1st of May for the first time since February, with market analysts now expecting it to break beyond the 100,000 Rand mark. The move could mark a pivotal run and potentially push Bitcoin to a new all-time high in the coming weeks. We now chat to Carol Diaga, research lead for blockchain technology at the CSIR. Carol, what is all the excitement about now? Because just a couple of weeks ago, there was a lot of concern with those that hold a blockchain as an investment, because it was weakening during those higher tariff announcements.
Yeah, hi, Motheo. So Bitcoin actually do trade as a risk type asset in general. So we, or it used to at least, we used to see it fluctuate along with tech stocks, for example. So with those tariffs and the drop in share prices of the big tech and generally American companies, we did see Bitcoin, the price of Bitcoin go down with them in parallel. But actually, more recently, maybe in the last week or two, we've seen a little bit of a divergence from the Bitcoin price, and it's held up steady and actually increased quite a bit. And if we look back at the first 100 days, I see Trump is in the office for 100 days now. Can you believe it? If we look back at the last 100 days, with the new administration, we've really seen a phase of legitimacy from the asset class. We saw large institutions buying the asset in very big numbers. We saw some price prediction of the likes of Wells Fargo and Charles Schwab and BlackRock. Larry Fink from BlackRock even predicting $700,000 for this year. So it's really entered the phase of legitimacy, and I think it's very well accepted by the likes of these large fund managers. And then in addition to that, I think there's about 12 U.S. states now. Don't quote me on that number, but I think it's 12 that has strategic Bitcoin reserve bills currently being tabled.
Is it just Bitcoin that's surging, or are other blockchain holders going up as well?
Bitcoin's really stealing the show at this moment. I don't think that, it's the only one to keep an eye on, in my personal opinion. I think the likes of Ethereum and Solana and Sui and XRP, even maybe to a lesser extent, those are all assets to keep an eye on and have proven themselves in the last decade or more. But Bitcoin's really stealing the show. It's all about Bitcoin. Wall Street is only speaking about Bitcoin. I think maybe Trump, he definitely has an incline for some of these other assets as well, so he definitely likes them. But at this point, all of the ETF news and the big assets, the strategic reserves, and the treasury discussions all revolve around Bitcoin. All right,
that was Karel Diaka, research lead for blockchain technology at the CSIR. Bitcoin ETFs have also amassed over $1 billion in net inflows in the past 4 days. So definitely something to keep an eye on if you have that type of risk and stomach to be in the blockchain investments.
You're with Motheo Khoaripe on 702 and Cape Talk.
Talking now the Money Show explainer, and the Reserve Bank with egg on its face after the Gauteng High Court ordered the Reserve Bank to release 200 million rand to IBEX Holdings, the former Steinhoff company. The court says the central bank has abused its own exchange control powers by freezing the funds at IBEX. The case goes back to July when the bank's financial surveillance exchange control department refused to allow IBEX then to get its 9 billion rands to international financial creditors just 3 months after it had given permission for this. IBEX took over Steinhoff's assets and liabilities after the furniture retailer collapsed under former CEO Marcus Joost. Another court has gone out to say that the Reserve Bank got it very, very wrong when it comes to this. And it made me question around regulation in South Africa. You want to see the Prudential Authority, especially when there's mass corruption and what happened with Steinhoff. You want them to hit the big companies hard. But when it comes to the court cases and carrying out the punishment now to the companies, we seem to get it wrong there, which is what I think happened with the South African Reserve Bank. The bank must now unblock all payments to IBEX's foreign creditors that it approved in April of 2024 and allow all future approved payments to flow through for the company. So it's all good and well for the SARB to keep an eye on exchange controls and who's doing what and if there is any wrongdoing by big companies. But when these matters go to court, and as you well know, a lot of the big companies will have a big budget for their lawyers and they'll back their case. And you really are rooting for South Africa's regulators, whether it's competition or the Prudential Authority, to do it right in court and get it right in court. But it seems with this Gauteng High Court ruling that the South African Reserve Bank will have to go back and look at its own processes and see whether it can get this particular case right, because even though IBEX now holds the liabilities and assets of Steinhoff, the main case was for Steinhoff, the accounting corruption that happened, and you would have liked the SARB to see it through to the very end, but seemingly its own processes are letting it down when it comes to that particular case. Let's try and take the markets for now, and we'll see if we'll squeeze in that explainer for Friday.
The Money Show.
The markets.
Joined now by Patrick Matidi to cover today's markets, head of equities at Aliwani Capital Partners. I want us to start around the payroll numbers in the U.S. There's been a lot of talk about a recession in the world's largest economy, but those numbers easing those concerns today.
Yeah, good evening, Motheo. Thanks for having me. Indeed, those numbers were well watched just to get an indication as to what's happening in the labor market. So thankfully, they came out a lot better than expected at about 177,000 new jobs created versus an expectation of 133. Also, this comes during the background of the whole Dodge, sort of campaign, where civil servants have been sort of cut as part of the efficiency drive by the ministry in the new Trump administration. But it would appear that the private sector actually has held up quite nicely, because if you look at the overall unemployment number, that is still sitting at about 4.2%, which is flat compared to previous months.
How good then is it for the U.S. markets? The fact that China is open to talks around trade, I think it is great for the global economy, in fact.
Yeah, absolutely. So we have seen China making overtures to the U.S. to say we're ready to chat. So hopefully there is going to be some settlement, which is more palatable, which results, in the two sort of largest economies in the world, finding each other to the point where you do not have a spillover to the rest of the world, spiking recession fears. So hopefully those talks, do resume, and hopefully they do end in earnest.
We saw Apple, one of the big shareholders in terms of tech in the US, saying that, look, they reported great results. The iPhone maker reporting a revenue of $95.4 billion, up 5%. But the biggest warning being around those tariffs, 145%. Of course, they make a lot of their products in China, but also warning the market that most of their products will be coming from India and Vietnam as they try to avoid the China conundrum when it comes to trade.
Yeah, absolutely. So as you point out, the results looking back were fantastic, but it's more the outlook looking forward, where the share ended up 4%, on the back of that bleak outlook. So essentially, what they're saying is it's going to cost them about $1 billion per quarter in new tariffs. And obviously that will have an impact on the price of the products, and we can expect a slowdown going forward. The switch from sourcing from China into India, that can only take place, in the next year or so, because it does take quite a bit of effort to switch. It's not that simple. But nevertheless, hopefully again, these talks between China and the U.S., you will see the beneficiaries being the companies on the ground in terms of averting, some of these high tariffs that have since been announced.
Another big concern this time in the local economy, looking at the manufacturing industry, the ABSA PMI coming in below 50 at 44.7 points in April. A big concern when you think about South Africa's GDP and those major sectors that we rely on.
Yeah, absolutely. That came in a lot less than expected, so a bit of a disappointment. However, there were a few ones-offs, so hopefully the next, reading will come up a bit better. And those ones-offs, include the announced load sharing, which I guess it was a bit sort of unexpected, but also what we saw domestically in terms of the uncertainty with regards to the budget. That also meant that some of the buying decisions were actually held back, and not to forget, obviously, the impact of the tariffs that were announced in terms of demand for locally produced products. But as I said, hopefully going forward, you do see a bit of an uptick, given that some of those factors are since behind us.
We saw another update in the demerger of Anglo-American. Shareholders are overwhelmingly approving a plan to demerge its platinum group metals business, giving birth to a new entity called Valterra Platinum. What happens with De Beers as well?
Yeah, so this has been on the go. So you'll recall around this time last year, Anglo's got a bit of a wake up when BHP came knocking, wanting to take them out. They put up a fairly a credible plan to resist that takeover by announcing to the shareholders that they will actually restructure and focus on, let's say, new age commodities. So over the last 18 months or so, they've actually been restructuring and selling off assets and unbundling. So the latest one was obviously Anglo Platinum, where they will give that to existing shareholders under the new trade name that you have disclosed. The one that remains in the portfolio is De Beers. De Beers is proving very difficult, to sell off. They're trying to find a buyer, but also the fundamentals for the diamond industry are actually in structural decline, where we are seeing new age synthetic diamonds being introduced, which are a lot cheaper, but very, very credible from a quality point of view. And we're seeing demand shift away, from naturally sourced diamonds into those synthetics. So we'll see how that plays out. But currently, it is still part of the stable within Anglos.
All right, that was Patrick Matidi, head of multi-asset strategies at Aluwani Capital Partners, with a well-rounded market commentary.
702 and Cape Talk.
Motheo is on X
At Motheo_Khoaripe.
Let's get back to that Money Show explainer that we promised you, this time looking at the Reserve Bank's case against IBEX. The Gauteng High Court ordering the Reserve Bank to release 200 million rand to IBEX Holdings, the former Steinhoff. The court says the central bank has abused its own exchange control powers by freezing the funds at IBEX. Now, the bank must now unblock all payments to IBEX's foreign creditors that it approved in April 2024 and allow all future approved payments to flow. We're now joined by Rob Rose, editor of Currency and author of Stein Heist. We're still trying to get a hold of Rob Rose, in fact. But that case, going back to July, when the bank's Financial Surveillance Exchange Control Department refused to allow IBEX to pay over 9 billion rand to international creditors just 3 months after it had given permission for this particular occurrence. Now, IBEX took over Steinhoff's assets and liabilities after the furniture retailer collapsed under former CEO Marcus Jooste. We will have Rob Rose for you next week, the editor of Currency and author of Steinheist, around this particular story, just to find out, how did the SARB get it so wrong when it comes to this particular case? Because in terms of the companies on the JSE, whenever there is wrongdoing, you want there to be regulation. You want there to be a strong iron fist that deals with the corporate corruption that we've seen with the likes of Steinhoff. But when it goes to the courts, things seem to fall apart. So we'll have that explained up for you in the coming week.
The Money Show.
The Friday File.
The Friday File.
The local fashion venture Faro is transforming textile waste into luxury fashion using AI. Tonight we'll be talking to its co-founder Amber Penney, because of course unsold inventory is one of the biggest problems for fashion houses and retailers, with mounting levels of excess stock being discarded, some of it going out as waste. And this has become a big problem for fashion houses, especially with fast fashion. Let's find out what this local startup is doing to answer and become the solution for that problem. Amber Penney, co-founder at Faro, joining us for our Friday File. Welcome to The Money Show.
Thank you so much. Good to be here.
Great to have you. When you look at this particular problem in the fashion industry, piles and stockpiles of clothes that don't get sold and seasons move on and you have to have a new fashion come out, why did you decide to start a business that answers that question?
Yes. So, I suppose to start off with the global textile crisis, I suppose, how with the rise of e-commerce and fast fashion, the global textile crisis is only getting worse and worse. And I think it's actually a statistic that says it's projected to triple by 2050, which will reach 160 million tons per year, which is crazy. And so myself and my co-founders have been pretty plugged into the global textile overstock crisis for quite some time, I think. And we've engaged with a couple of global businesses that have really tried to solve this problem using kind of outlet fashion retailers. But I think the sweet spot that we have in South Africa is a unique one, where we've got almost a great intersection between a market that is extremely brand and status orientated, but also a market that's extremely bargain orientated. And so when we opened up conversations with the brands and the suppliers that we chat to, the response was incredible in terms of wanting to distribute into not only a market in that intersection, but also a market that doesn't cannibalize their own full price market. And so really it was a perfect sort of I suppose intersection between those factors and the fact that we could get access to so much of this global stock and redistribute it in a country to South Africans who potentially can't afford these brands full price usually. So that's kind of how we landed on the concept.
Most brands rely on destroying the clothes, if you will, when they become too old or stockpiles. How did you convince them to say, look, there's still life in these clothes, would like to resell them and make sure that we repackage them for our customers?
Yes. So, I mean, the tricky thing, right, is that legality is becoming a lot tighter around these issues. So at the moment, there's still a little bit of leeway for brands to incinerate and discard the stock. But it's seen that by 2026 in Europe, it's going to be illegal to do that, actually. So it's almost been the perfect sort of time for us to approach the brands and say, look, we essentially offering them a low margin and to cover some of the costs of the garments, whereas obviously incinerating or discarding it, they're losing money on the garment. So for them, it's a bit of a no-brainer. I think the only concern for them, generally speaking, when there are outlets in the US or the UK or the EU, is that it cannibalizes their full price markets. And so selling it to us at a kind of low margin that we can then pass on that saving to the customer, but also in a market that doesn't cannibalize their kind of primary market is a perfect situation for them to redistribute it, essentially.
Is customs a bit of a problem for you when you bring them into the country, and also around competition rules, because you bring in brands that are existing and some of them even a bit luxury, if you will, and into a market where there are already retailers in the country? How did you get around that conundrum?
Totally, yeah. So, I mean, we've got to be super tight around the customs stuff. I mean, as we know, it's very, very kind of tightly bound that it's illegal to bring in any secondhand clothing, and so we really needed to have all the right, labeling and documentation to show that the stock that we're bringing in is brand new, and is literally straight from the warehouse of these retailers. And I think with the local distributors, it depends obviously on the brand. I think what we've done is we have merged forces with some of them. And so when I say we get from global brands, a lot of that will come from local distributors as well. So if it supports, the local G-Star or local Zara, we will also get some of the stock from them to help them out with their dead stock. So we generally, we like to work hand in hand with brands because I think it's important to us to maintain those relationships. And I think, pass on the benefit to the local guys as well in terms of the kind of the overstock crisis that they'll be facing in their own right.
Can you tell us how artificial intelligence comes into play then for Faro in helping you out on this business? I can imagine there are tons and tons of clothes you have to get through and sort. Is that what the AI is for?
So it's sorting actually more so the manifest, which is a big one. So when we receive, the inventory that the brands have excess, we need to then sort that very quickly and make quite analytical decisions very quickly. And so instead of a person taking days and days to read through a manifest, we've got technology that will do that for us. And then similarly, we use AI for essentially it's predictive analytics. So to look at historical sales data, forecast future trends, and essentially personalize sales. So making sure we get the right stock in front of the right customer, which optimizes our through flow of stock. And so we then at the end of the day have a lower percentage of our own dead stock that we then need to move through. And so we're really kind of just trying to optimize all the way through the business, the stock movement.
Tell us about Faro's start. I mean, was there a great response from consumers, or were they skeptical about where this particular inventory of clothing is coming from? Is it counterfeit? Did they have questions?
Oh my word, so many. I think the fact that firstly we are in established malls helps with trust for sure. I think now people know us and love us and know where the inventory comes from, and the more stores we open, the more we kind of educating the customers. Our store staff are super geared around educating customers around what the stock is, where it comes from, and all of that. I think something else that's really helped build trust is we often have the original swing tags on the garments. And so like if you're buying a Zara item, for example, actually the Zara swing tag will still be on the garment. And so I think we found ways to build trust, but I think being in established malls and people kind of familiarizing themselves with us helps. But I think generally speaking, there were a lot of questions in the beginning. Is this second-hand? Is it pre-loved? Where do you get the stock? Why are your prices so low? I think people couldn't believe that they could buy, a Calvin Klein puffer jacket or Zara puffer jacket for 300-400 rand. And so I think it's almost a little bit of disbelief up front, but we are super geared to let people in on where the stock comes from. And I think be super transparent. Like, that is a massive value of ours. Is we want the customers to know exactly what our kind of mission and values are, and so they can buy into that too.
How did you deal with the word of mouth and the rapid growth? Because you start a business like this, people find out there's quality clothing going for affordable prices, especially with the cost of living crisis now. And they come to your stores, everybody wants in. How do you make sure the stock is right to match the demand?
Yeah, I mean, so in the beginning, I suppose our first store was in Mitchell's Plain in Promenade Mall, so it was a little bit of a softer landing. But I think from N1 City onwards, N1 City was our second store, and at the launch, we actually had to close the door because we couldn't actually let more people in. Like, we had to essentially get like a bouncer almost at the door to try and manage the queues. And so we are seasoned in terms of how crazy Faro launches are and how high our foot traffic is. I think our staff, we have the best store teams and such good energy, and I think they really kind of band together and help us manage. The inventory piece, we've got access to a huge amount of inventory, so we can switch on the tap whenever we need. We've got a big DC that obviously holds a huge amount of our stock, and so we can press play on releasing stock quickly. I think it's more about managing actually the mayhem that happens in the store over the launches, which is I think insane, but so positive. And the word of mouth has been amazing as well. I mean, our social media, some of our TikToks have gone viral, which has made a huge impact as well. And I think it's on the tip of people's tongues. I think people were wanting something new and a new retail space in South Africa, something to be excited about. And I think this has given them something to look forward to and feel like they're buying inventory that's of value and that they aren't sort of being ripped off, So, yeah.
You were solving an inventory problem for major retailers and fashion houses. They move their stock to you. Do you deal with the same problem of having storage problems, inventory problems, as you run the 6 stores that you now have?
So we essentially order for the amount that we need. So, essentially, if we need to kind of up the ante and, sell-through is going through the roof, then we'll turn on that tap and order more from the brands. But we don't house all of the overrun stock. So it's order-based, based on what we are seeing in terms of sales, what our customers are asking for, and then we can essentially switch that on. So we've got a big warehouse that has a reasonable amount of inventory that obviously then we don't run risk, even if we do sales do boom, that we won't run out of inventory. But generally speaking, we just make sure that DC is full to the right percentage as we open stores. But I mean, it's been tricky because we are opening at a rapid rate. I mean, we're opening a store pretty much every 3 weeks for the rest of the year. And so we, at the beginning of the year, had 4 stores. By the end of the year, we'll have 16. And so for a new retail business, we are rapidly growing. So we're having to continuously hack away at things and figure out how to adjust. But yeah, I think on the buying planning side, the guys have done a great job so far.
Is the brick and mortar growth of the brand forcing you to have e-commerce infrastructure that will also help you make sure that the stock is moving at the warehouses?
So we aren't looking at the kind of online sales at the moment. I think what's tricky with it is the operational cost of uploading images when often the inventory is one of a kind. So because we're buying from brands with a manifest, we don't have inventory depth. And so if you're buying a black Zara puffer jacket, there's going to be a medium, and that's
one of one, yeah.
Exactly. So it's a lot harder to manage the e-commerce side. I think maybe over time, especially as we're building AI and technology, we could get there. But I think for now, brick and mortar has been incredible. I mean, yeah, I think South Africans like to see and touch and feel the things that they buy. And we also like to engage with our customers. I think that's been the biggest learning for me, like coming from a technological background and more of an e-commerce background. It's actually been so incredible to be able to just walk into a store and engage with our customers and ask people how can we grow? What can we be doing better? What are you enjoying? And just get constant people time, which I think is really valuable, and actually inject a really good energy into the head office as well. That constant people engagement.
And is it only clothing and apparel that you are dealing with, or do you also have a footwear section as well?
Yes, so it's footwear, apparel, and accessories at the moment, with hopes to expand our categories quite significantly over the next bit.
Talking about expansion, a store every quarter, did you say it was? You're trying to move to 16 stores this year. That's great expansion. One would ask about your war chest and building that war chest to make sure that you have enough funds to build these stores. How is that going? Is there a lot of interest from investors?
Yes. No, incredible. I mean, I must say we've had a really lucky journey with our investors so far. I think that's really been the final piece of the puzzle that's got us to where we can be at a level of scale that we need to be. And I think, we've been incredibly privileged. I mean, we've partnered with some pedigree international investors like JP Zammit, President of Bloomberg, James Boardman, and then some really incredible local investors. I mean, E4E Africa have been with us almost from the beginning and led every round, and have been kind of our number one supporters. And so, our investor kind of relationships have really set us in good stead to scale the way we want to.
Now, in 2024, Faro closed a $6 million funding round, and I want to know about the ambitions of using that kind of money. Are you looking for a store footprint all around the country? Are you looking at the SADC region as well as more and more of your inventory increases?
Yes, so definitely. I mean, we're looking to expand predominantly in South Africa first. So we, at the moment, are predominantly expanding between Gauteng and Western Cape, but we'll definitely look at KZN and probably Eastern Cape and the likes over the next couple of years. But I think global expansion is inevitable for us. I think either, I mean, depending on a couple of factors, I think, emerging markets is where it's at. So whether that be in Africa or outside, I think we will look to definitely tap into new emerging markets in the coming years.
All right, that was Penney, co-founder at Faro, a very, very interesting business, part of our Friday File tonight.
702 and K-Talk. Motheo is on The Money Show.
It is time for the Friday Blitz Biz, where we quiz you on all the information we shared on the show this week. This is your first question. If you know the answer, call 011-883-0702 or 021-446-0567. First question, Finance Minister Enoch Godongwana is scheduled to table the budget on the 21st of May. How many times has he done this exercise this year? Finance Minister Enoch Godongwana is scheduled to table the budget on the 21st of May. How many times has it done this year? Keep mind of that wording. If you know the answer, 011-883-0702, 021-446-0567. The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025, the Friday Blitz Biz that we have now. And Clement in Midrand, you only have one shot for this particular question, given the time we have. Finance Minister Enoch Godongwana is scheduled to table the budget on the 21st of May. How many times has he done this exercise this year? Bit of a tricky question.
For the third time.
The question is, how many times has he done this exercise this year? So he's tabling the budget on the 21st of May. Looking at this year in February and March and now in the 21st of May, how many times had he gotten the opportunity to actually table the budget?
He's tabling for the third time.
Like I said, a very tricky question, but he's actually tabling it for the second time, because if you think back to February, he didn't get the opportunity to do that. He didn't come up on the podium in Parliament and only tabled it in March, and this will be his third try. You're right about that, but in terms of the past three times, he's only been able to table it once. That was Clement in Midrand going for that tricky question in the Friday Blitz Biz.
This is EWN.
Time now is 7:01. Martin Slebet with your news.
Thanks, Motheo. Good evening. The EFF has submitted a memorandum of demands to the city of Tshwane, urging the municipality to take action against the whites-only community of Kleinfontein. Thousands of EFF supporters marched to the Afrikaner exclusive settlement earlier today, calling on the metro to shut it down. The 900-hectare settlement was declared illegal by the Pretoria High Court as the land is zoned for agricultural and not residential purposes. EFF Gauteng chairperson Nkololeko Dunga outlined some of the party's key demands.
The city of Tshwane must immediately implement the August 2024 High Court ruling by halting all illegal developments in Kleinfontein and compelling compliance with municipal laws and regulations. Number 2, investigate and regulate Kleinfontein. They must conduct a full investigation into the legality of Kleinfontein's existence.
Non-profit organisation Forum for South Africa say they want the president to fast-track the signing of the NHI bill into law. This comes after a Johannesburg Metro police officer was denied emergency care because of the city's outstanding medical bill, a move that the organisation has described as inhumane. Forsa leader Tebogo Mashelompane says this incident is an indication that the NHI bill will ensure that no one is denied medical care.
The working class and the poor cannot suffer any longer at the hands of those who are chasing profit at the expense of lives. Access to health facilities is a fundamental human right. So NHI will make that possible.
To the Western Cape now, and the municipality of George says it has not yet received an expert report that it initiated to probe the cause of the tragic building collapse in that town. The municipality's senior officials briefed the Western Cape Legislature's Standing Committee on Infrastructure today on what happened on the 6th of May last year. That's when 34 people were killed when a partially built 5-story apartment building collapsed. The disaster triggered an 11-day search and recovery operation. George Mayor Jackie von Brandes says a structural engineering firm appointed in December last year has promised to have a full report available soon. She adds that council also sought legal advice against any potential legal implications.
The legal opinion concluded that Section 23 of the National Building Regulations and Building Standards Act provides statutory protection to the municipality against liability for losses incurred during the construction of the building, provided the building plans have been duly approved by the municipality.
And it is a star-studded evening in Sandton tonight as politics is set to clash with comedy.